Hello, traders. Gary Wagner here. Just before noon in Honolulu, 6 o'clock in New York. It is Monday, 14th day of June, 2021, and this is the daily report for gold and silver. Traders are going to focus intently on tomorrow's FOMC meeting, which concludes on Wednesday, and listen if there's any talk about tapering, because that could raise yields on U.S. debt, and that, of course, would be a bearish influence on gold. However, if the reverse happens, we could see gold move off of these recent lows. Interestingly enough, the low today came in right at the 200-day moving average. We'll talk about that in detail when we pull up our charts, but the show begins now. Currently, we have gold down $12, trading at $1,867.60. But the key is the low today, which came in at $1,845.70. We'll cover that in detail because it is important and shows us where major support is. Traders are awaiting the beginning of the FOMC meeting tomorrow, concluding on Wednesday, and will listen intently for any information regarding talk about tapering, any change in the dot plot or raising interest rates, which I don't think that they will touch. And while the Fed is not expected to raise interest rates, any talk about tapering or action on tapering could take U.S. debt instruments in terms of their yield higher, and that, of course, would be a negative influence on gold, which is why inflation right now is a double-edged sword when we look at gold pricing. By the looks of it, with gold selling off over the last 2 days, it does seem as though market participants are expecting some talk about tapering, maybe even talk about when that will begin. They've already announced that they will stop buying corporate bonds, but whether they dramatically cut their asset purchases on a monthly basis is something we'll have to wait till the conclusion on Wednesday to follow through and know for sure. But on a technical basis, we can say a couple of things. First of all, take a look at the 61.8% fib retracement and concurrently the 200-day moving average, and then compare that to the low today. It does seem as though this particular price point, call it $1,845, has been a strong area of support. It has touched upon it on two occasions since bouncing up above 1845, and is the line in the sand that I believe we need to hold if we're going to maintain a bullish stance. Now, although we have seen a definitive correction since gold prices ran into solid resistance at approximately $1,920 per ounce, that is this high here, we have seen a couple things happen. First of all, we had a golden cross between the 50-day moving average in green, crossing above the 100-day moving average in blue. We also can see that all things being equal, we do have the 50-day coming closer and closer to the 200-day. That would be the first step towards getting to what we call full bullish alignment, where you would have your 50-day moving average, followed by your 100, followed by your 200-day moving average. That would be in full bullish alignment. We are nowhere near that yet, and depending on what comes out of the FOMC meeting, will it really determine the course of gold prices in the near future. For right now, though, we're going to maintain a neutral and flat stance with no active trades in gold. Silver broke back below $28 per ounce, just by a hair, closing at $27.99.5. That's a total decline of about 15 cents per ounce. Between gold and silver, there is no doubt. When we take a look at the three different moving averages, the 50, 100, and 200-day moving averages, they are in full bullish alignment with the 50-day on top, followed by the 100 and then the 200-day. However, unlike gold, what we do have is a price range that can be best described as a tight and narrow range between these two fib levels, the 38.2% and the 23.6% retracement. 28.37, that is current resistance. with support at $27.12. We are also flat silver with no active trades. As the market traded overseas yesterday, Monday morning in Australia, Hong Kong, and London, it was trading higher, actually trading to a high last night of $4.58. It is currently tracking at $4.52, down about a penny and a half on the day. I am still extremely bullish on copper. While unquestionably we have seen copper prices retrace from the highs at approximately $4.87 down to major support that comes in at the 50-day moving average at $4.49. Yes, we have a full bullish alignment, the 200, 100, and 50-day, but more importantly, these moving averages are widening apart or at least staying parallel for current pricing. And what I find most impressive about copper in terms of recent retracements, and once again, I'm going back to about November of last year, when we've had these corrections, they seem to find immaculate support at the 50-day moving average there, here, and on this last rather large one here. So it seems logical to me that this would be a jump-off point to move to higher pricing. It is for that reason that I recommend that you maintain your current long positions at $4.47 and $4.55. Maintain your current stop right around $4.39 per pound. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Fed Day for the next daily update and review. Have a great day. Bye-bye.